Hey, good evening, fellas. How we doing up? How we doing down south there, Luke?
Yeah, all good here. Just away for a couple of days playing golf and working. But otherwise it's getting a bit warm, which is good. Oh,
Awesome. And Jeff, how you doing, man?
Oh, we're doing good. We're back. No active fires, so we're back to standing by. And there's a thunderstorm right at the edge of the airport, so all the stuff is tied to the ground. Maybe I'll make it through the meeting without getting called out.
Hopefully, fingers crossed. Hey, all good here. The girls all landed in Kansas City Airport from their week-long vacation in California. Hopefully, the house will pass inspection upon their return. I think we'll be okay. We put in some effort, and that's what they want to see. They want to see the effort. Otherwise, all good here. No time like the present to just kind of launch into it. So I'll summarize real quick. My work in progress this week is I finally got off my butt and started doing the coaching program, listening to some videos on dialectical behavioral therapy, which is a dialogue-based form of emotional state control connected to cognitive behavioral therapy, which is well regarded for treatment of borderline personality disorder, but which in the coaching program is strongly connected to how to just learn to develop mindfulness and emotional state regulation before it becomes problematic. So I'm interested in seeing where this thing goes, and it feels good to finally get my wheels turning on that project. So that's where I'm at these days. So let me turn it over to you guys and get you started for this week's check-in. Luke, I think you got that one by a nose there. Go ahead.
I'm up to lesson 26, and I'm finding these lessons so good because I didn't do these ones last time because it must have been the end of year, must have been got too busy or something like that. So in terms of where I'm up to, it's quite useful. So lesson 26, honing creativity into innovation. So where I'm up to in terms of my trading, especially the DAX breakout strategy, and I think of it often in that, and I actually looked at my charts that I marked up back in 2016, 2017, when I was looking for patterns and looking for price action levels, and also where the trades would end at the end of the day, and what my take profit position would be, and that was based on oil, gold, wheat, and the DAX, and also Nasdaq. But that had no real analysis in terms of slippage, commission, contract size, anything like that. So it was very, very. It started off very. There was no real context about actually paper trading it to actually getting any results in. So I had no real creativity back then in terms of how I could create a strategy based off that. Now that I've created this stack strategy, I basically have it robo traded through the broker, set pricing for take profit, stop loss levels. Sometimes it will go long, then it won't hit the take profit. So if you hit the stop loss level, then it will go the other side. And after that, there's a couple of trade management techniques that I need to look into. And so for this lesson, it says to aggressively seek failure out, to work out how bad the system is and how the system can break itself. And I find that it's basically a hypothesis to work out if this system was to break, how badly can it actually break. And when I was doing the back testing on this before I have started to trade it live, I looked at it and just think, how badly can this actually get, and getting to a take profit of some arbitrary figure to work out what the R histogram would actually look like. And the first reason why that is, you're basically removing yourself from the system. You're basically doing a post-mortem at the end of the strategy, collecting all the results. And when it's dead, you can actually move on to a next strategy. And it might give you some idea about how you could move on to the next strategy. I expected it to fail. Why did I expect it to fail? I looked at it before. And so, but I didn't realize that I'm looking at it through a different lens. I'm looking at it in terms of, Ken talked about it in the foundation course this week, perspective shifting. I'm not looking at so much on a per trade basis. I'm looking at it on a per day basis, because sometimes there might be one loss in this strategy straight away, but normally it's only about a 0.4 or a 0.5 loss. And then the next trade, if that gets to the take profit, that's a 1R gain. So overall, 86% of the days are winners, and some of those gains are not huge, but it means that you can put in some position sizing on that to make sure that you can reach your daily, weekly, monthly goals. So that's why I think it's making it quite simple. One of the eye-opening aha moments I've had in the last 1 or 2 weeks is I'm writing up this system for the DAX, but I'm also going back and looking at all my highlighted notes on Kindle that I've had for Van's books in terms of systems development, psychological mindset, the systems mindset, the money / position sizing mindset, and how that would fit into the system. And I forgot how many notes I've made on that. So that has been quite useful. And I actually did one of the tests that Van wants you to do to work out what sort of trader you are. And I'm 100% a detailed trader, and we've got to be careful that I'm so into the details that I'm not looking at the big picture. And that's exactly what an accountant / Excel-driven results-based person would look at, as opposed to not looking at the bigger picture. And that's what I'm focusing a lot more on this strategy. It's looking at it more on a day basis, what you can actually collect, and not focus, as Ken would say, on that one trade. That one trade is the next trade in the set of 1,000. So putting that and collecting them based on a daily basis and analysing the results based on a daily basis, not so much on a per trade basis. What else have we got? Ken talked about the 10x strategy in the foundations course this week. And in terms of that, I really am just focusing on the numbers of the daily capture and making sure it's 2 steps forward and 1 step back. Making sure that the perspective of this strategy is more based on the daily perspective, not on the trade perspective there. So in terms of this lesson, what I did and why I find this strategy sometimes wanting more, and this is in addition to the current strategy that I've got, but it's just a thought bubble that I had, is to try and work out, say for the month that is just gone, so the month of August, look at 10 of the 20 best trading days, the best range days, like breaking out from that 5-minute candle. What's the maximum favorable excursion? Because sometimes it will get to 120 points and then come back. Working out what that maximum favorable excursion is on average of 10 of the best 20 trading days, then working out what to do in terms of trade management on that. Then one idea might be exit half the position and let the other half run for either the end of the day, end of the session until New York one opens, or add a second position and exit both of those positions, looking at it in terms of a 1-minute PSAR touch. And normally that will be because when it normally goes up to 140, 150 maximum favorable excursion, that trend has caught up and the 1-minute PSAR might take more of the gift, and in terms of that, that might make it more, the R capture might be higher in terms of that. But that's what I was just thinking to do, but I'm not going to do that until I make sure I've got this system down pat, got all the rules set out and things like that. Yeah, and I thought I'd just share my screen because I've done some work based on the DAX strategy and where I'm up to. And I'll talk you through my thinking. So with this DAX strategy, yep, just a breakout system and has advances in the super trader book. This system doesn't require me to be in front of the screen at all times. I've got it set up with particular order entry levels at a certain time, and it means I don't actually have to sit in front of the screen. So in terms of that, it's a system where a bot can actually trade it. It's got take profit levels, maximum trades per day is 4, and I really just let the numbers do the talking. So in terms of breaking it up, in terms of CEO and management and worker mindset, the CEO is really looking at reports based on a weekly mindset. The management's looking at it in terms of a daily mindset, and the worker's looking at it in terms of a trader mindset. And going through the different responsibilities of each person, the reports are different, and the trader really is just follow the checklist and work out what the entry and exit parameters are. You don't need to use your head. You just need to follow the checklist. There's no creativity. You just get paid for turning up and doing your job. In terms of getting into that mindset, I find that, and I've never really done meditation, so this is something I really need to work on, is 20 minutes before the session even opens, just sitting down, getting into the mindset of being a trader, and letting the thoughts just flow through, working out where I'm up to in terms of trading, and just letting the thoughts just go through and making sure that I know what the job is that I need to do in terms of the trader. And then at the end of the day, just making sure I'm ticking off the checklist. I'm doing the entry rules, doing the exit rules, and ticking them off, and making sure the orders are done correctly in the broker. And that's basically it. There's no other jobs that the worker actually needs to do. And then the management basically comes in the day after, does the reports in the morning. So always mark up charts in the morning and look at the reports based on a trade average, but also a daily average. And this was a trade yesterday that really, I think I lost 1.3 last night. So really looking at making sure that the average is around 0.5 per day, and looking at some of the reports to not just focus on one day, but to focus on potentially 5 days, and then working out where we are at the end of the week, but also ensuring the daily averages are where they need to be. And reviewing, the management also needs to review the worker, make sure the process is followed, and if there's any mistakes that have been executed, how to minimise those. Then at the end of the week, the management does the reports for the CEO to make sure that the weekly goal was attained. In terms of the results for system, 2.5R is the average per week over 24 weeks that this system has produced. So if we're within one standard deviation of that, then we're still tracking along nicely. But there might be some questions that CEO asks of management that we actually need to get into that mindset. So it's really breaking it up between trade, daily, and weekly, and what the process is, what the questions are, and what we need to do from there. And just more reports in terms of the CEO. The other thing I've just been working on is my work in progress has been this DAX system, getting all the visuals in it, marking them up, how I can explain it, and the entry and the exit rules, the trade management, and really getting some of my thoughts into Snagit and just working out what are the bare things that I just need to focus on, and just really working on it from there. But in terms of this lesson, what this has done, this is something that I'm not used to doing because I really just do it. But I think breaking them up into 3 separate roles allows me to really just work on what actor I really just need to focus on. And one thing I'm working on at the moment is position sizing, how to position size effectively on this system, if it's on a daily basis or a weekly basis, and whether or not changes need to be made. So I'm just looking at some of the objectives that Van would say in terms of position sizing and how I can reach my goals based on that. So that's my work in progress for this week, I hope.
Yeah, that's looking good. The the theme from the lesson about the rule of threes really had something to do with synthesizing at the next higher level of integration or aggregation. That each one of those rule of threes, sort of like suitable, feasible, acceptable, past, present, and future, bull, sideways, and bear. Those trinities, those trios, are really pieces and parts of a greater whole, a larger theory that has interpretive value. And I noticed the importance of the mindset that those things represent is even more important than the individual components, if I can say it that way. And that reminded me of your weekly CEO, the daily foreman, and the machine operator. It's the synergy of those 3 guys that makes that team work. In the same way that on TV, the Big 3 basketball tournament, it's not just the 3 best players, but the guys that get to the finals and are competing have a point guard, a swing band shooter who can slash, and a great big guy who can block shots and gather rebounds and stop their big guy. So it feels to me as you're pulling those notes together and integrate, it's reflecting more and more confidence on the components, is freeing you to now start thinking at the top level of systems. And I want to encourage you to look at the dark side of being that detailed trader. If I feel like sometimes if I let you, 5 years from now, you're going to have another sheet with more notes. Get this thing going. We want to see some production numbers to get you past, the problem of the best being the enemy of the good. Just remember, you don't gotta outrun the bear. You put your track shoes on so you outrun your buddy, and so the bear will catch him. So you're going to have to cultivate that part of you that can accommodate good enough. The trade-off is to yourself. You say, I'm willing to be just to be good enough and not perfect, as long as the side that wants to get going, like, hey, I want to get going and get on with this thing. So I need you to give up your perfectionist bias. Yeah. Well, what's my trade-off? Okay, I admit I'm a perfectionist, and you're not a perfectionist. You're a performance artist. You want to get going. You're asking me to give up some of my perfectionist bias in order to initiate movement now. What are you giving up? Well, the one who wants immediate action has to give up their enjoyment of the flow state to just get going. They have to commit to a process of continuous improvement. I will let you be good enough to get in there and start trading and get going, but the price of me permitting you to do that is you've got to commit to gathering the data and suffering through the attention to detail to look for on the performance charts the kinds of insights that you're getting already.
Yeah.
So it seems to me that when we start framing our trade-off decisions in our internal theater, when we call a little staff meeting and all the little pieces and parts of us come to the table and we gotta make a trade-off decision for the good of the team. If you think of that, it'll normally come down to two competing values and an adjudicator. And the adjudicator, the final decision maker, has to make sure that each side is represented and each side is paying some price for the trade-off, that it's not all one way or the other. We got to find some way to blend those competing values into a good enough solution. And so it seems to me the willingness to set aside the perfectionist bias, it's almost a little too glib to say that. Well, just don't be a perfectionist. Oh, you mean give up my commitment to being correct and with good information and a properly understood, a proper understanding of the way the world works? You want me to just give that up so I can just hurry up and start going? That's what you're asking me to give up? Well, yes, but if and only if you commit to a continuous improvement. And that's where that's where that appeals to your perfectionist, because you get to gather data and do the math and look at the stats and interpret that. So the trade-off decision both sides have to have skin in the game. So I would encourage you to get on with this thing. We need to get it going. And put a mark on the wall where you intend to give your first presentation to someone outside the Creativity 202. If that's November 15th, let it be so. But come up with a date that makes you just a little bit uncomfortable, to give you skin in the game, to commit to getting to closure. So, yeah, I like where you're going with it. I like the aggregation and the integration. It feels like it's coming together pretty nice. And those numbers are just off the chart good. So that's why we got to get this thing going.
Yeah.
All right, man. That sounds good. Jeff Southern, getting the work done out there in the woods. Man.
We're...
Go ahead.
Go ahead.
Yep.
We're still working 10-hour days, so my intraday trading is not happening at the moment. Got one swing trade on, but not much to talk about there. I'm sitting in the truck with a 3x5 or a note card, so this won't take very long. I emailed in my check-in just in case I wasn't able to attend this meeting. I'm on lesson 27, Honing Creativity into Innovation, Part 2. And my word was integrate last week, or this week. So my big challenge, or one of the things I've been working on right now, is to integrate all the new information that I'm gathering and all the skills that I'm acquiring into an effective daily routine, working out the competitions of old habits and trying to establish some new habits. One of the things in this lesson that's really resonated with me was the story of Igor Sikorsky flying the helicopter 450 years after it was thought about. So that really stresses or emphasizes the importance of creating artifacts and giving them to the world. If those artifacts hadn't existed, would Igor have thought of that, or would we just have a world without helicopters? So that was kind of interesting. This lesson talks about the trader's exercise is what would it do for you if you adopted the sniper mindset? And I did that exercise, but that led me to the question of how do I create the sniper mindset in myself, which is a little bit different challenge than just writing down what you think it would do for you. So I have a process where I'm just going through using first principles and evaluating everything that I think I know about myself and my trading. Hopefully by asking those questions, I will have done the work that it takes to instill that mindset in myself. So I asked myself, why does Ken have such a bulletproof sniper mindset? And I think the reason is because he's done all the work that's required to reach that end state. It's not like you can just put a thumb drive into your computer and install it. It has to be written and coded and tested. So I've got a process for doing that is probably going to take the better part of a month, maybe more. The mindset will just be there. But I don't think it's as easy as just knowing what it is and how good it is, and then the next day, you have it. I think it's almost like doing push-ups. So
Yep.
The other thing I've been working on is completing. I realized suddenly that over the last 6 months, I've just started a lot of things that I haven't finished. So last 2 weeks, I've been really working on completing things that I've started so that I can just focus on the most important things. And I think that's my check-in for today. I hope.
Yeah. I noticed in my own work that, when I have been dragging my feet on a big project, I start a bunch of other little things that seem like good ideas at the time. And I notice that when I finally just kind of shame myself into getting ready to go for it and get on with it, there's always a preliminary stage of tidying up the workspace, getting to closure on easily finished things that I've been deferring, cleaning the space, rolling up my sleeves and that kind of assembling the tools, and a cup of coffee to kind of, I can feel that shift in mindset about, man, I'm getting ready to do real work here, so I need a little open area to do that with. It sort of feels like what you're doing in that sense. Something it occurred to me, we've heard about the accountant, the pilot, and the sniper tonight. Each one of those archetypes represents something that's really powerful at a root level for each of us in our own ways. And so as you start thinking about those questions about the sniper mindset and whatnot, also try that, substituting that same question but the word pilot and accountant, just and see how that resonates with you too, because it sort of represents the absolute trustworthy nature of that icon and what it means for you. So it's almost, I think it would almost be more important to use the keywords for pilot and architect, because what you're asking that icon to do is to validate your choices that you make as a trader. I'm committing, my sniper, for me, I commit my sniper mentality to the way I approach trading, and I have a belief that if I apply that same kind of bulletproof mentality and total commitment in trading that I did as a sniper, then it's going to have positive rewards, and I can rely on that when times are tough. So the icon that you choose to sort of represent your strongest mind is important. It's important to work your way through that and say, what does it really mean for me? Why is it a source of strength? And how will I know? And then how, like in the lesson for 26, which says, seek failure in the systems quickly. I said, how will I know according to that mindset if it's not working? And I just want to connect that idea back to this notion of the 5 ways of knowing: the head, heart, gut, hands, and feet, and the idea of the trade-offs. And I had this insight earlier this year in one of these check-ins. The more I think about it, the more like that your rational mind is satisfied with the optimistic and the regular case of a trading system, because it's done the math and looked at the numbers, and it says on the basis of those things, this system is good enough to trade. And I ask the other parts of my committee to trust me on that. Let's get going with it. The fear-based mind is not persuaded by any of that, because that's not its area of expertise. What the fear-based mind, the gut, is there to do is to say, look, everything that we do with our rational mind is an approximation anyway, and there are tigers out there, and our assumptions and beliefs, even our evidence, may not capture what's happening in this dynamic world. And so we've got to be overly concerned about the catastrophic case, even if it's low probability, and that that fear-based mind wants to be respected for its purpose and function. Have you really done enough work on preventing the catastrophic worst case scenario? What are your layers of defense that show that you are respecting my concern with the downside of any system or of any trade? That mindset comes out of the scholarly literature on high reliability organizations, which are large, complex organizations that are wildly successful at surviving, even though all the odds are against them, like aircraft carriers, firefighters, as you know, Jeff. They don't fail at the same rate that businesses fail, which is 90% failure within 5 years. How come these large, complex, critical state organizations don't fail? It's because they have 5 rules of behavior, which forms a culture. And the number one is, focusing on failures, recognizing where plans fall short, understanding fat tail occurrences, and then having layers of protective contingency plans that overlap and protect against, and then being aggressive at searching out evidence of failure. So it's a preoccupation with failure, not the fear of failure, but with the facts of failure, of putting your sensors in places where failure will first appear. If this thing is going to fail, what would be evidence that it is beginning to fail? And then put the sensors there, knowing that confirmation of performance and excellence will take care of itself. You'll see that easily. So as I put all those things together, it just seems to me that we've got to make sure that at our table, we've got that guy speaking up for the low probability events, for the concerns of the unknown, concerns for how dynamic the world is and the way it changes, especially when we're committed to making money in critical states, when things by definition are at their most chaotic. That's the place where failure should most often appear. And so we've got to be sensible to that. And so I was happy to see, Luke, that you had a chance to listen to Nicholas Taleb on all that and the fourth quadrant problems. You can actually find an essay I wrote on that, Taleb and the fourth quadrant problem, and his discussion of why statistics and MBAs will get you in trouble in this business. You combine that with Lowenstein's When Genius Failed to really just understand the importance of humility and always having an out. And, I always remember, in conclusion, I got to run upstairs. The girls just came home. I remember Robert Gardner's advice, the late, great Robert Gardner, who's, he always said, I would rather be on the outside of a trade wishing I was in than inside the trade wishing I was out. And he was just ruthless when it came to not exceeding his heuristics on position sizing and risk management. Like he had a 5-20 system that was based on our relative strength ideas, where he would say, look, I want to have 20 least correlated asset classes, and I want to put about 5% into each one of them. And he said, the way I'm going to do that is I'm going to put 3% into each one of those 20 all the time, which accounts for 60% of the portfolio. And that the other 40% would be allocated to, the top third of them who could get up to an additional 5%. So it could go, his normal position would be 3 all the time. It would grow to 5 sort of routinely, and it could go all the way up to 8 before, no matter how good it was, he would never let it get beyond that level. And so he just kind of adhered to that discipline, and no amount of statistics and back testing and whatnot could ever shake him of his belief in the, that rule of thumb, which had guided him for 40 years through, good times and bad as a wealth manager. So that's kind of where I am this week, just integrating things, feeling them pull together. My work is including pulling together some kind of presentation on our community of practice, the way it is evolving, and the things that we offer, in order to make a presentation one time in the best way to the VTI community of practice. Now that they're they announced this week or last week that they're closing shop here shortly, and so I'm going to make probably one presentation to the to their mailing list and to the people, and say, hey, look, a lot of you have seen some of the stuff we've done. Here's a chance to look at all the stuff we do and the direction it's going and why you might be interested. So I want to make sure that I can capture that quickly and completely as best I can, the way we're shaping things out. So, the work you guys are doing is making it really easy for me to do that, because if you're a teacher, show me your students, and the work you guys are doing is so good. And the things, Griff and Phil and my brother and Jeff and Bill are doing are really just kind of showing the way that what we're doing has consistency between us, but also individuality to express, our own personal goals, objectives, strengths, and things like that. So I just want to commend you on the work that you guys are doing, and really enjoyed hearing from you. All systems good here. I got my certificate of health from the surgeon, the cardiologist, and the physical therapy people. So I'll start physical therapy next week, and but all systems go, and looking forward to the next phase of the journey. So I'm going to hit the tones here real quick and invite you to think about and listen to the word that comes to mind to guide us for the week ahead. Luke.
Acceptable.
Jeff.
Completion.
Scouting. All right, fellas, you take good care, and we shall see you on down the road shortly.
Okay, see you later.